21st Century Entrepreneurship with Martin Piskarik.
If you're exiting a highly appreciated asset, Bitcoin, business, real estate, you're going to be facing millions of dollars potentially in capital gains tax. In this episode, we're going to be covering how to defer that tax and how to build an entrepreneurial capital gains tax exit plan so you can multiply your freedom and impact. My name is Brett Swarts. I'm a best-selling author of Building the Capital Gains Tax Exit Plan. I also host the Build It to Billions podcast and Capital Gains Tax Solutions podcast. My insights have been featured in the Best of Real Estate Conference, CLP Capital Conference, and American Entrepreneur with Kevin Harrington from Shark Tank, as seen on Fox Business Network. I'm the founder of Capital Gains Tax Solutions, and I teach purpose-driven entrepreneurs and investors to build their capital gains tax exit plan to multiply their freedom, wealth, and impact. And I'm really focused on helping you do just that. We've closed over $500 million in real estate and DST transactions. And I was also one of the first to help Bitcoin owners exit millions of gains and defer their capital gains tax without having to move to Puerto Rico. Let me introduce you to a concept when it comes to capital gains tax. Most people think about strategies that are very inflexible. In fact, most think about our strategy when they hear DST as a Delaware Statutory Trust. That's one of the most inflexible strategies you can use because it ties up your capital for 5, 7, or 10 years with a group that typically owns real estate, which is nice, but you have no diversification, no liquidity. And ultimately, the big problem with it, it doesn't work for Bitcoin owners or business owners. So if you're in the tech entrepreneurial space, if you own Bitcoin or cryptocurrency, it doesn't work for you. Now, if you want to invest in real estate, it can work for you, but I want to be very clear, that strategy is one that can be used, but it's not the one that's probably ideal for you if you're an entrepreneur listening to this podcast. In fact, the strategy that we focus on is called a Deferred Sales Trust, which serves the purpose of an entrepreneur and investor to be able to sell their Bitcoin, real estate, cryptocurrency, really any asset of any kind, stock, and you can defer the capital gains taxes. In fact, in one of my podcasts, I had a gentleman named Kevin Harrington from Shark Tank on the show, and he didn't know that he could use this strategy to defer public stocks. Can you imagine that? A billionaire entrepreneur, one of the best in the world at what he does, learning something new on a strategy that he thought wasn't possible when it came to selling his highly appreciated stock. So that's what I'm going to teach you today, a little bit more about how to do this and how it might be a good fit for you. So let's really define the problem when you're exiting, right? You need to figure out what your gain is on the asset you're selling. To figure out your gain, you need a couple pieces of information. Number one, what did you buy the asset for, plus improvements, minus depreciation? So let's break it down. Let's imagine you bought $1 million multifamily property in Silicon Valley. This property is now worth $10 million, okay? Now, on that scenario, if you bought it for $1 million and it's worth $10 million, that's a $9 million gain. Now, to be really clear here, if you've added, $500,000 of improvements, your basis is now $1.5 million. So you have an $8.5 million gain. But let's add one other layer. If you depreciated that asset by $600,000, now you've dropped to a $900,000 basis, right? And now your gain is approximately $9.1 million. And so these are really important to understand. Now, if you don't quite know what these numbers are, that's okay. Ask your CPA. They should be tracking this for you. But the first thing to understand when building a capital gains tax exit plan is just this. What is your true gain on the asset you're selling so that you can determine your capital gains tax? And so let's dive into that. Capital gains tax is the difference between basically the sales price of the asset minus any closing costs, okay, minus the gain, okay, and that's going to give you a number. And then you're going to times that by the federal tax rate, typically 20%, because we're talking about $1 million plus deals right here, right now in this kind of scenario. and the state. And so, for example, in California, it could be at least 13.3%, and you could have additional Obamacare of 3.8. So I like to say 37% for California. And, New York, New Jersey, these are some of the highest ones. Illinois, you're going to be in that 35 to 40% range is a good rule of thumb. Now, everywhere else, there's different tax rates in different states. Some of them are 0%, like a Texas and a Florida, Nevada, right? Tennessee, these are more favorable states. Other states are somewhere maybe around 2 to 5%, but I think you get the idea. What we're looking at here is a capital gains tax of about 20 to 40% of your proceeds. And so that's the big problem we want to solve for. The next step after you figure that out is, well, then what strategy or strategies can help me solve for this? Again, entering the Deferred Sales Trust, we're going to talk about the foundations of how this works, and I'll break it down right now. Number one, it's based upon a tax code called IRC 453, which is an installment sale method of reporting. Now, you may have heard of IRAs or 401ks or even 1031 exchanges. These are all different tax codes and they all have different rules. Now, an IRA, it might be the one that you're most familiar with. You can invest into this and it allows you to defer income tax and capital gains tax. And essentially until you receive payment from the IRA, and you'll pay some tax on it. And think of it as a deferral mechanism. Well, I want you to think about the DST or the Deferred Sales Trust like a IRA for your big multi-million-dollar exit. Okay, it's the best way to think about it. Although there's some different changes here, but I'll walk you through it right now. Number one, it's an installment sale that's happening here. You're actually selling to a trust prior to the trust selling to the ultimate buyer. I'll actually give you a real live deal story. We had a client who had $5 million of Bitcoin. In fact, it was more than that. It was actually 50 million of Bitcoin. They bought it for 50,000, went to 50 million. They never sold. If you ever heard of the never sellers for Bitcoiners, this is who she was. In fact, she worked for one of the biggest tech companies in the world in San Jose, California. And she was faced with massive capital gains tax, and she didn't want to move to Puerto Rico, which can be daunting for those that are moving from California to anywhere, but especially to Puerto Rico. So she found our services, and what was unique about it, her situation was she knew she had an exit price. In fact, at 54,000 a coin, this is about a couple of years ago in the run up before Bitcoin now, which is over about 115,000 a coin. She looked at her tax liability, about 1.85 million of tax. And so what do? Well, we set up a trust, and this trust first received the Bitcoin, gave her a promissory note. In other words, she became the bank, and immediately sold the Bitcoin to the marketplace. In fact, we use Kraken as our place. It's like a Coinbase. And the trust, because it bought for 5 million and sold for 5 million, the trust had no gain, you see, because if you buy for the same price, you have no gain if you sell for the same price. Now, in her situation, she hasn't received any constructive receipt, meaning she hasn't received any of the 5 million. She is the bank, she is the lender. Therefore, she's in a deferral state. That means all 5 million can work for her versus 5 million, one is the 1.85 million of tax. Now, a promissory note means there's an interest rate on the note. In this scenario, I think it was around 8% or so, but typically our notes are written at, 6, 7, 8, 9, sometimes 10% or more, depending on the risk tolerance of the client. And that's the whole idea. She's become the bank. She has lent the $5 million, and she sold it to the trust in exchange for a promissory note. She's basically lent to the trust, and therefore she only pays taxes if she receives payments. Now here's the best part. She's able to diversify that wealth. Into what, you might ask? Well, that's a great question. In fact, she can put it into whatever she wants. And now in her situation, we diversified it into some stocks. We diversified it mostly actually into an entrepreneur venture, a business startup. Now, if you're an entrepreneur listening to this might be the best, most valuable thing you're going to listen to right now, because here's the reality. Most either venture capitalists or even people that are in any kind of place where they're trying to bring in capital, the biggest challenge is people have to come with after-tax dollars. In this scenario, with our strategy, it's before tax dollars that can be invested alongside of her and her business partner on a business startup idea, which was essentially like a Khan Academy online, like an online educational for children. And so her dream, her vision was to use the Bitcoin without having to pay the tax in the year of sale to accomplish her goal. And that's exactly what the Deferred Sales Trust did for her. And it can do the same for you. So let's dive in to see if this could be just an amazing thing for you. You might be asking yourself, okay, this sounds like it's legal, sounds like it's legit, sounds like it can unlock some things for me. I have Bitcoin, I have businesses, I have real estate, I have millions of gain, and I want some flexible strategies to invest in different things at different time. And that's really what I want to focus on right now. Who is this a great fit for? Number one, if you have $1 million net proceeds and $1 million gain of a large asset sale coming up. And I say key this coming up because you need to set this up prior to. In fact, that's what we specialize in, is executing and building these capital gains tax exit plans. In fact, we wrote a book on it. It's called Building a Capital Gains Tax Exit Plan. You spent 5, 10, 15, 20 years building your business or investing into your investments. You have massive gains. Well, the government wants to take 20 to 50%, 40%, sometimes maybe 50% with depreciation recapture. That's a big amount. But if you spend just 5 hours with us, we can build an exit plan that allows you to defer that tax, compound that wealth, and invest into businesses with you, real estate, stocks, cryptocurrency. I'll use an actual deal story here that helps you bring this to life again. We had a $13 million business exit for multiple partners in San Diego. It was actually a car wash that they built from the ground up. If you've been to San Diego, they have some of the best food when it comes to Mexican restaurants. In fact, they found a Mexican restaurant that was a small taco shop, if you will, but they said, hey, we'll put you inside of this car wash and we'll double and triple your business, but we need to buy your land because we need to combine it with the land next door. And so that's what they did. They had a vision, they made a deal, they made a win-win for that gentleman, and the restaurant is in there and it's a car wash. Well, within the first year, the thing boomed and they were able to exit $13 million exit and about a $4 million basis. Now, this is really neat because they had a big success, but here's the challenge. Four partners, and each of them wanted to go their own ways in a sense, but we set up a trust for 3 of the partners. One of them just paid the taxes. This was too small, and it seamlessly helped each of them achieve their goal of exiting, deferred their tax, and then start to invest at different investments. If you're listening to this and you have a partnership that's going to be separating, guess what? We can set this up for each of the unique partners. Number 2, you might be looking at a 1031 exchange. You might say, well, you know what, Brett? I love real estate and I like 1031 exchanges. Well, so do I. In fact, that's what I started my career in. I'm a real estate investment advisor. We help people do 1031 exchanges. We invest, we've built real estate. We've helped syndicate deals. We've helped raise capital. We're very familiar with the real estate world and we love 1031 exchanges. We give you an option. We have the best 1031 exit plan that gives you an option for a regular 1031 exchange. And if it fails, a backup plan into our deferred sales trust strategy. Here's another key fact. Sometimes it's 2, meaning you do a partial 1031 and a partial deferred sales trust. Sometimes it's 3. Okay, get ready for this. It's a partial 1031 exchange, partial deferred sales trust, even a partial Delaware Statutory Trust. In fact, that's what we did for a client named Craig out of Texas. He sold a $6 million piece of land and he bought a deal in Oklahoma, a deal in South Carolina, did a partial Delaware Statutory Trust and a partial deferred sales trust. In other words, you can diversify with the different strategies. That's part of what we do here at Capital Gains Tax Solutions, plural with an S, is give you multiple strategies to actually solve what you're solving for. That's the difference. That's a unique advantage. You need to have a team that understands the multifaceted exits of real estate, business, Bitcoin, and also understands the multifaceted team to help you execute on that next part of the wealth advisory. We work with some of the best financial advisors in the country, I think something in the world, and we build like a fractional family office. This is key. You need multiple advisors. We all do for all of our wealth, especially as you're exiting 5, 10, 15, $100 million exits. We want to provide it for you, $1 billion exits. I'll leave one other thing for you right here to really think about. A lot of people just think about capital gains tax. That is definitely a big one to consider. That's mostly what we've been talking about. But there's also the income tax deferral mechanism that allows you to defer income tax within our strategy. In fact, if you're listening to this and you're considering exiting, you probably already solved the cash flow rich dad, poor dad concept a long time ago. And or you're exiting, you're going to have that massively coming in. But here's the reality. We need to manage the income tax deferral. Our strategy allows for a compounding effect because you don't have to take the full payment from the trust. In other words, let's say we wrote an interest rate on a $10 million note at 9%, it's $900,000. You may only take $300,000 or $400,000 in interest payment and let the other amount accrue. And at the trust level, it typically doesn't pay tax because what? It can expense the interest on the note. This is all part of the IRC 453 installment sale reporting rules and the way that we structure the trust. So this gives you a compounding effect where you continue to build wealth because you can defer the income tax. I'll leave you with one other one. This is the ability to eliminate estate tax. Okay, so if you have a $30 million net worth and you're married, and greater than that, you have what's called a debt tax problem. Most people make a mistake thinking that the stepped up basis will solve for your $100 million net worth. Here's the challenge with that. The stepped up basis only solves for capital gains tax. And then after that 30 million is accounted for, the $70 million difference between 30 and 100 is going to be subject to a 40% death tax. This is so key. Now we have a solution to get it outside the taxable estate, and that's what you need to do before you die. Now, if you're listening to this, I'm not planning on dying. I know I'm not planning on dying either, but we need to have a plan in place to eliminate that estate tax, because otherwise that 40% will be crushed. Okay. So here's the question you need to ask yourself. Number one, what is your net worth? Number two, how much is inside your taxable estate? Number three, how much is above that $30 million married amount or $15 million single? Now here's a solution for you. Let's say you have $130 million of Bitcoin. Great. Guess what we can do? We can sell that $100 million of Bitcoin into our strategy. We actually call it our DST 2.0 version. And it eliminates that 100 million outside your taxable estate forever. It eliminates that estate tax forever. That's immediately $40 million elimination on the 100 million. Now let's imagine Bitcoin then grows to $1 billion within this trust. That's a $400 million estate tax elimination. So not only on the exit, but on the growth over the lifetime of that investment. This is massive. Now here's the key thing. There's no life insurance. There's no gifting. There's no charity required in this. This is part of what separates us from our competitors. Not that you shouldn't give to charity, but give to them on your own terms. Don't have to give it to them immediately. Charities might change, and so you have flexibility with the charitable giving or how much you want to give with our strategy. Again, you can still be an entrepreneur with this strategy. You can still be a person who diversifies the wealth. Those are just some of the major things. Go to capitalgainstaxsolutions.com to get started. Download our free guide. Go to capitalgainstaxsolutions.com to get our book. Check out our YouTube channel. We have client testimonial stories. Just search Capital Gains Tax Solutions on our YouTube channel. We also have another YouTube channel called Build It to Billions. Our goal for you is not to only just build wealth and exit smart, but also to be able to be a steward with the capital and to help MVPs. Who are MVPs? These are the most vulnerable people. These are the people that are hurting, need help, and you have a heart for them, or maybe it's a different cause to it. Maybe it's not people, it's something else, but whatever it is, we want to be a guide to help you unlock that freedom, unlock that capital, unlock that impact with a team that focuses, yes, on capital gains tax and estate tax, those kind of things, but more so, how do we get massive cash flow to make bigger impacts right now for the things that you care about? That's what we're all about here at Capital Gains Tax Solutions. Hey, one last thing before I go. I just want to remind you of the bonuses and the opportunities that you can start right now to be empowered with the education of what I've been talking about. A lot of these things can feel like they're complex and they're overwhelming, and it is a lot at first, okay? But we created the ultimate capital gains tax solutions roadmap. In fact, it is a free guide that you can download by going to our website. But I also want to tell you a little bit about the guide. It's how to defer your capital gains tax when selling any asset of any kind, unlock truly passive income, and forever eliminate the need for the 1031 exchange. We have interviews with Kevin Harrington from Shark Tank in the book, interviews with billionaires, interviews with clients that have actually shared their story here, okay? Interviews with some of the top financial minds in the world. One gentleman named David Young, who helped to build PIMCO from 80 billion to 1.2 trillion. It's an invaluable guide, and it's my total free gift to you. And I want you to go to capitalgainstaxsolutions.com to download the guide. It also has QR links to free video playlists, okay? Plays that go straight to interviews. So I've been on probably 100 podcasts like this that goes into deep dive. And so if you're going to exit, you want to be educated, you want to be empowered, get the guide, go to capitalgainstaxsolutions.com. And then of course, if you want to, connect with me more as well, Instagram, LinkedIn, Facebook, okay? Search Brett Swarts. I also have brettswarts.com. It's kind of the place where you can find kind of all of these things, okay? And including the Building Billions podcast, the Capital Gains Tax Solutions podcast, and brettswarts.com. I'm going to spell that for you to make sure that you don't spell it wrong because it can be a little confusing. It's B-R-E-T-T, and then it's S-W-A-R-T-S. So only S's, no Z's, B-R-E-T-T, S-W-A-R-T-S.com. So brettswarts.com. It's kind of the catch-all to connect with me. I so appreciate you listening or watching this podcast, and I look forward to being of service to you real soon.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskarik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.